All right, welcome back. So today we're gonna have asset number 2 to invest in. So if you haven't been following, number 1 was crypto. Not saying that it's number 1, but it is an asset class to try out. I just started trying it out, so check out that video. I am going to do an updated video about crypto and my thoughts about it, not just explaining asset classes. So this one is stocks that we're going to go over. Very simple. It's basically owning a share of a company. It's been around for a long time. It's been proven to work for a long time. I think people, it depends on who you ask, but some people say compounded over years, like the average rate of return is 11. Some people say it's 7%. So again, I'm talking about long-term holds here, not like short-term. So if you're interested in the short-term, this video is not for you. Maybe we'll have something later on. But we're going to do long-term for people to understand like why we should start investing in stocks as soon as possible. Don't wait. All right, so for example, I'm going to go to the Dow Jones. It's just basically you could invest in like an ETF that follows the Dow Jones. You can't like technically just buy the Dow Jones. But basically the Dow Jones, S&P 500, NASDAQ, Russell 2000, they're all like kind of like ways to almost show how the stock market is doing. So if we go to the Dow Jones, which is probably one of the more popular ones, and you go to the year to date, which means January 1st, you can see that it's already up 8% for the year, which is kind of crazy because we had the new election, and it tends to be really volatile for the first year for elections, and we haven't really had a legit recession yet. So besides that, 8.8% is absolutely fantastic. So again, if you're not investing in stocks, please think about it. Please do it so that way you could hopefully retire in the future. Now let's go for 5%. You're looking at 60%, or 5 years, you're looking at 67, almost 67.5% increase just on the Dow Jones, which these are usually like, again, blue chip stocks. So like slow movers and stuff like that. And then if you go to the S&P 500 and the NASDAQ, which is what everyone's talking about, year to date, you're at 13%, which is absolutely amazing. You could do ETF that follows this. And for 5 years, you're looking at 100% return. Like that is insane for 5 years. So imagine that compounded over 25 years, right? Crazy. Let's see what this goes to. 1988. You're looking at a 37,000% return for, what is that? 40 years. Pretty crazy. NASDAQ, another one for the year to date is, I guess not too, well, hold on, it's today. Year to date, 17%. Again, absolutely crazy. Since 1988 or whatever it starts at, you're looking at 22,000% return. So again, just think about that for long-term investing. There is short-term stuff that I'll probably go on later on, but this is basically an asset that you should be looking into if you're a long-term investor. So this is M1. This is a new app that I've been trying out. I love it because it's super simple. It basically does this pie form, and you choose what you want in your pie, the percentage that you want to invest in. As you can see, this is just, again, kind of more of a conservative investing pie chart. This is not like aggressive, even though the last one is ultra aggressive. But all in all, this is all like safe stocks. And again, for just starting this out, we're already up $131 and 17%, which again, almost 18% is insane. So please, 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 if you don't do this, buy and hold them for a long time until you retire. And I could almost tell you that you're going to make a good amount of money. It's going to be worth it instead of just putting it into a savings account where it's not going to be able to grow as much. So please look into this. Even if you could put $20 a week, a paycheck, a month, whatever it is way better than just holding on to the money. Do not just hold on to cash if you don't need it, or if you could squeeze the extra $5 here and there, $10, just throw it into an account that is safe stocks or whatever you really want to do. But, safe stocks is probably better for retirement for the long term. So if you like this video, please like and subscribe. I enjoy the love. I appreciate it. And look out for the next asset class, which I'm going to try to do tomorrow. And this one will be a little bit more interesting.